Hi there, this is Kirby Scofield, Scofield Realty, and a lot has happened in our market with the Fed and everything as of recent. With the mortgages and with homes, here's where we're at. We know they raised 0.75 basis points on the Fed. Mortgage rates with that, which are tied different, went up. They're around 6.2, 6.7 for the regular FHA loan. Of course, it's all different based off of product. So with that, though, we go, what does that affect? Affects affordability and first-time home buyers. People who went to buy a house or were locked, or not locked in, but they were looking for a house pre-approved Friday to pre-approved Monday, and it was regular FHA home out here, almost $700 difference in price per month on payment. What does that mean? Does not mean that you can't still buy a house. What it means is sellers are going to have to shift in their area. We see it in our market huge. Price decreases, increase in inventory. Sales are still staying strong and pending still staying strong. But what's happening is before, when we've been talking for a whole last year on these, is appraisal gap. Seller has a house at, we'll just say $500,000 or $450,000, and they're getting $20,000 to $50,000 over appraisal and a premium. That will be gone now. We've already seen it. Where now our clients are getting within just the last week, and I'm giving you this video on June 16th. The Feds announced this yesterday, June 15th. So we're within the dates because tomorrow the market could change again from this video. And from there to now, within this last weekend, we have seen people getting closing costs, not paying appraisal gaps. Now it's going to come down to doing the comps correctly, not magic price on the home. Homes are not going to decrease, but the value that they've been at is going to maintain at it. Now, some other wild info that has happened in our local valley here, Vegas, that we've done by looking at our analytics. Used to Vegas, was the $10 all-you-can-eat buffets or $10 steak dinners, and is that little strip area, and then you look at the map and it's like nothing much off of it. We've turned into a major metropolitan. A lot of affluent and wealthy clients have moved. Most of our newer neighborhoods being built, the big ones, the master plans, are affluent neighborhoods. We became a sports town with the Raiders and with the first with the Golden Knights and with the Raiders, with the Aces. As of yesterday, same time the Fed's announcing the 0.75 Fed basis point hike, we also had developers announce at Blue Diamond and Las Vegas Boulevard a $3 billion stadium site for NBA, future of NBA, hopeful, so that we could get a bid for NBA. Now, to give you presence on what $3 billion is in stadiums, the Raider Stadium, Allegiant Stadium, which is massive and insane, $2 billion. So they just announced a $3 billion build for a new build. The other places we have a new casino going, the Station Casinos project, that it's been sitting there 20 years, this land, 215 in Durango. It's being built right now. The family that owns the M is building another casino across the street from them. Another product that was hold during COVID, all that kind of stuff, called The Bend, which is right where IKEA was built over here, is going. So a ton of projects going, a ton of huge communities being built. The Summit, Ridges is already fully built out, Askaya. Our average income, though, in Vegas by Bankrate.com, $106,000 to $373,000 is the average income here. So it ranks us 10th among major metropolitans of not like the best place for a first-time home buyer, but as far like San Diego's number one, San Francisco's number 3, used to be number 1. We're number 10. We're actually ahead of LA now as Las Vegas by Bankrate. So we've changed our landscape, what we are as a town. You can still get a home. Go get pre-approved now because they say it's going to raise another 0.75 basis points by the end of July. So think another $700, $800 a month in payment. Understand the rates historically between 6 to 7%. That's still good. Historically, that's still a good rate. And know as a buyer and a seller, you either have cheap money, which we've had, or you have cheap homes. Right now, you're kind of in the middle. I still see appreciation. Hopefully on the forecast, of course, can't predict the market, but we should still be appreciating we were prior to COVID due to our commercial growth and the people coming into our town. We still have no income tax as a state. If you're a seller, we kind of hit that peak. If you're looking to sell, it's time to sell. Uh, Downsizing, um, upsizing, whatever you're deciding to do. If you're a buyer, get approved today. Stay in contact closely with your lender daily as you're shopping, because you're going to have more options to shop for now, which is pretty cool. But you have to stay in contact with your lender daily. Make sure you lock the rate we need to. Watch the Fed. Watch what they're doing with mortgage rates. It's going to dramatically change your payment based off of what happens in that industry. So it's the best time ever to pay attention very much to that. With that, meet with our agents. They will be watching this. They'll keep you in tune with inventory. I just know west side of town, for example, we have a search go on for some clients that Saturday, this last week, homes that were like single story, 435 and below, taking FHA loans. We always kind of watch that first time home buyer. And this side of town where our office is, there's like 12 available. That was it. And it doubled, tripled over the weekend. And every day, more and more are hitting. And used to, we had about 500 price decreases per 7 days. We're at over 1,000 now in the last 7 days. So get out there, get buying. If you're selling, get in that market now. This is Kirby Scofield, Scofield Realty. Thank you.